All right, let's get right into it. We're going to talk about professional trading today, specifically how the pros manage to cut through all that chaos, all that noise, to find the signals that actually mean something.
I mean, that's the million-dollar question, right? You've got thousands of stocks moving every single second. How in the world do you find the real opportunities? Well, that's what we're going to unpack here. A system for finding those high-probability setups, not by guessing, but by learning to read the clues the market itself gives you.
Okay, so our first clue, it's all about spotting contradictions. Think of it like this. The price of a stock is saying one thing, but its inner strength, its momentum, is whispering something completely different. It's like someone confidently walking forward, but their legs are secretly shaking. That disagreement, that's a huge clue. And when it happens in just the right spot, that's when you get an A-plus setup.
And that brings us to the RSI, the Relative Strength Index. Now, you've probably heard of it for overbought or oversold levels, but that's kind of surface-level stuff. What it really does, its secret sauce, is momentum. It's basically looking at the last 14 candles and asking, who's winning the fight, the buyers or the sellers? It compares how big the green candles are to how big the red ones are. It's a peek under the hood to see who's really got the power.
So here's the secret, the part most people miss. We don't really care about the RSI number itself. What we care about is when the RSI disagrees with the price. This is called divergence, and it's a huge psychological signal. It's the market basically telling you, yeah, the price is ticking up, but trust me, the energy, the conviction behind this move, it's fizzling out. When these two are not on the same page, it's a massive clue that the trend is running out of gas.
And here you can see the two flavors of this divergence perfectly. Over on the left, check this out. The price is dropping, making a new low. But look at the RSI. It's actually making a higher low. That's your bullish divergence. It's a subtle sign that the sellers are getting tired. Now on the right, it's the complete opposite. The price is pushing to a new high, looks super strong, right? But the RSI is making a lower high. That's bearish divergence, and it's screaming that the buyers are getting winded. In both cases, it's a major heads up that a change in direction could be coming.
But, and this is super important, you got to remember this quote, an indicator like this, a divergence, it's not a green light to just jump in and trade. It's a clue. It's a confirmation of a thought process. It's the market whispering to you to pay attention, that something's up. But it needs to be backed up by other evidence, which, conveniently, brings us to our second clue.
All right, clue number 2. This is where we give that contradiction signal a stage to perform on. We're shifting gears now, from looking at hidden momentum to looking at the market's, well, its memory. We're talking about a kind of hidden map on the chart that almost every serious trader is watching.
So, you see these lines on the chart? Those aren't just random scribbles. They're what we call static levels. Think of them as ghosts of prices past, the high and low from yesterday, last week, last month. And for traders working inside a single day, these are everything. Why? Because everybody's watching them. They become these psychological battlegrounds, these gravity points where price is likely to react. It's a self-fulfilling prophecy.
And this table breaks down exactly how to think about them. It's pretty simple, really. If the price is right near one of these levels, like the previous day's high, get ready for a fight. It's a breakout or rejection point. But if the price is far away from that level, well, now it's a target. It's a destination. The price is either trying to get to it or coming from it.
Okay, this is where it all comes together. This is the fun part. We take our first clue, the contradiction, and our second clue, that hidden map of levels, and we combine them. This is how you build an actual system.
And the whole core idea is this. The absolute best, highest probability trades happen at the intersection of our two clues. You're not just looking for a random divergence floating in the middle of nowhere. And you're definitely not just buying or selling because price touched a line. Nope. The magic, the A-plus setup, is when you get that RSI divergence showing up exactly at one of those key static levels.
So how do you find these in a market with thousands of stocks? You don't do it by hand. You use scanners. Think of them like Google for the stock market. You run two main searches. First, you scan for stocks with huge volume. That tells you where the action is. Second, you scan for stocks that are hitting our key levels. And your priority watch list? It's the stocks that show up on both of those scans.
Okay, let's put this into practice with a real pattern. We're going to look at something called the morning star. Now, candlestick patterns are basically just a visual story of the fight between buyers and sellers. The morning star is a 3-candle story that signals a potential bottom. By itself, it's pretty good, but when it shows up in the right place, based on our system, its power goes through the roof.
The pattern tells a story in 3 parts. You see that first big red candle? That's Act 1. The sellers are totally in charge, just hammering the price down. Then you get that tiny little candle in the middle. That's Act 2. Indecision. The sellers are losing steam, they're getting tired. And then, bam! Act 3. That big green candle shows the buyers have stormed the castle, taking back control and closing way above the midpoint of that first candle. It's a classic comeback story.
And here it is, the A-plus setup. This is the whole shebang. You get that morning star pattern, but where does it form? Exactly at the previous day low, one of our key map levels. What else do you see? You see a bullish RSI divergence, confirming the sellers are exhausted, and to top it all off, you get a big spike in volume. That's not just a guess anymore. That is a textbook, high-probability setup.
Okay, so your system has flagged a potential trade. It looks good, but before you even think about clicking that buy or sell button, you've got to run through one final check. Think of it as your pre-flight checklist.
This checklist has 4 parts, and it keeps you honest. Phase 1, market context. Is the wind at your back? Is this stock's whole sector strong today? Phase 2, the levels. Is this trade really happening at a key level we care about? Phase 3, technical confirmation. Do you have both the RSI divergence and a candlestick pattern to back it up? And finally, Phase 4, risk. Do you know exactly where you're getting out if you're wrong, and where you're taking profits if you're right, using those static levels as your guide? You've got to have answers to all 4.
And that really brings us to the big takeaway here. What if the best trades aren't about having a crystal ball and predicting the future? What if it's about learning to spot the market's own contradictions? This whole system, it's about shifting your mindset from trying to guess what's going to happen to simply listening to what the market is telling you right now and then reacting to those really clear, high-probability signals when they appear.